Bitcoin crashes 70% to 24 grand on Christmas, but it recovers instantly. What the heck just happened? Yeah, you heard that right. 70%. Just gone. I mean, imagine this. You wake up on Christmas morning, you grab your phone, and poof. Your Bitcoin holdings have basically vanished. But then, and this is the crazy part, just as fast as it crashed, it snapped right back. Okay, so let's actually walk through this timeline because it is absolutely bonkers. 1 minute, Bitcoin is just cruising along at $87,000. Then, literally seconds later, on Christmas Day, it just nosedives all the way down to 24 grand. And then before you can even blink, it skyrockets right back up to where it started. I mean, talk about a perfect and terrifying V-shaped recovery. So really, what on earth just happened here? Was this the big crypto apocalypse everyone's always worried about, or was it something else entirely? Stick with me because in the next few minutes, we're going to break down exactly what caused this chaos, why it matters so much to you, especially when you're juggling student debt and rent, and, here's the best part, how a glitch like this can actually become your next huge opportunity.
All right, first up, the Christmas Day glitch. To really get what happened, you gotta understand the mood in the market at the time. You know, tensions were super high, investors were getting nervous heading into the holidays, and Christmas Day 2025, well, it was about to become the breaking point.
And here's where it gets interesting. This crash didn't just happen in a vacuum. Not at all. The Bitcoin ETFs, the big funds where institutional money plays, they were seeing massive outflows. A ton of money was leaving. At the same time, Ethereum was trading way below its all-time high, so the whole market was just on edge. It was basically setting the stage for something dramatic to go down.
And get this number, $1.1 trillion flowing out of those Bitcoin ETFs right before the crash. That is a massive signal, right? It means the big players, the so-called smart money, they were all heading for the exits, and that left the market really thin, super fragile, and just primed for chaos.
Okay, so big numbers, market jitters, I get it. But why should you care about any of this? Let's bring this down to earth and connect all this crypto chaos to the actual financial reality most of us are living in right now.
Because while all these institutions are tossing around trillions, our generation, we're staring down this number, $1.7 trillion in student loan debt. Yeah, and when you're trying to climb out of that hole, every single dollar you invest feels absolutely critical. A 70% drop, even if it's just for a second, isn't just some number on a screen, it feels personal. It hurts.
I mean, just think about it for a second. Your budget is probably already squeezed pretty tight, right? Rent keeps going up, but that entry-level salary, not so much. In that world, a sudden crypto crash feels exactly like getting slammed with a massive, unexpected car repair bill. It's the kind of gut punch that can totally derail your entire financial plan. Okay, so let's get to the real story here. This wasn't some fundamental collapse of Bitcoin. It wasn't a crisis of faith where everyone suddenly gave up on it. Nope. It was a technical issue, a glitch, and it was all driven by one super important concept, liquidity. Now, liquidity sounds like a fancy finance term, but it's actually pretty simple. It's just about how many buyers and sellers are in the market at any given moment. So, on Christmas Day, think about it. Almost nobody is trading. With so few people online, one single large sell order, or maybe even just a system error, can send the price into a nosedive. Why? Because there just aren't enough buyers around to soak up that sale. That is exactly what happened. The market was a total ghost town. Okay, and this is the part that most people completely miss. They see a crash like that, and they just panic. But here's the twist. This wasn't a sign of doom and gloom. It was a glitch. And for just a few brief, chaotic moments, it exposed a really incredible opportunity. And this number right here, this shows you exactly why. If you were prepared, say you had a buy order already set up, just waiting for a dip, you could have scooped up Bitcoin for $24,000. And then, just seconds later, you'd be looking at a $63,000 profit on every single coin. So what was pure chaos for most people was a massive, life-changing opportunity for the prepared few. So, the big question is, how do you become one of those people? The ones who see opportunity instead of just panic. Well, it all comes down to having a plan before the chaos hits. So let's do that. Let's build that action plan right now. So here's a simple 5-step framework to get you started. Step 1, protect your downside with things like stop losses. 2, be really smart about how much you're putting in. 3, diversify your holdings. Don't put all your eggs in one basket. 4,
automate your buys using dollar cost averaging or DCA. And number 5, and this is maybe the most important, build an emergency fund first. That way you're never ever forced to sell in a panic.
Let's zoom in on that smart allocation piece, because this is so key. You do not need a fortune to get started. Seriously, on say a $50,000 salary, we're talking about just 2 to 5% of your overall portfolio. That's only $1,000 to $2,500 to start. It's a totally manageable amount that gives you exposure to that potential upside, but without risking your entire financial stability.
And even with that small slice of your portfolio, please don't bet it all on one horse. A really simple way to spread out that risk could look something like this. Maybe 50% in the big dog, Bitcoin, 30% in Ethereum, which is kind of the engine of Web3, and then the last 20% in some other promising projects you believe in, like XRP or Solana. It really is all about not having all your eggs in one basket.
So when you boil it all down, here's the real takeaway. The Christmas crash wasn't some bomb that blew up the entire market. It was a blip. A blip on the radar caused by low liquidity. And yeah, it's definitely a reminder of the risks involved, for sure. But it's also an absolutely incredible display of just how resilient this market can actually be.
And that really leaves us with one final thought to chew on. These kinds of events, they're going to happen again. The crypto market is volatile, and it's probably going to stay that way. So the only real question left is, will you be ready for the next one? Are you prepared to turn the next market glitch into your greatest opportunity?
And of course, gotta do the responsible thing here. Just a quick reminder that this is all for educational purposes, and it is definitely not financial advice. I mean, wild events like this one are the perfect example that past performance never guarantees future results. So always be sure to chat with a qualified financial advisor before you go making any big investment moves.